Let's get over now to Evan Lucas from IG in Melbourne to see what he made of it. And as I said there, Evan, we did see a move into the 89 space just briefly overnight. Was this all about the better than expected data we got out in the United States? Home sales, private jobs data, better than expected, so therefore US Fed tapering sooner than expected?
Yeah, I think that's the interesting question. A lot of people are now starting to try and sort of talk up what's possibly going to happen in around about 10 days' time of that December 17th, 18th meeting in the Fed. Yes, we are getting better than expected data coming out of the US, particularly considering that on their double mandate, so that's inflation and also the employment numbers, they do look quite good. The ADP print was an exceptional number, and I think that's the correct word to use. At 215,000 added, that is well ahead of expectations, which was 172, and we saw 182 last month, so that is above what Charles Evans always talks about, which is the average number being 200,000 change. We now have to wait till Saturday morning, our time here on the eastern side of the world, for the actual official employment and non-farm payment roll data. If they also do what they did in October, which was hit 204,000 jobs added, and they do a similar print or above, and it certainly does put that in the case. So all of that is US dollar strength, and that's why at the moment you're seeing the Aussie dollar really flirting with that 90-cent under handle, and if you do drop below it, you could see it going back to what we sort of saw when there was pre-running of the Fed, when we saw in September, we got down to around about 89, almost touched into 88 cents, and that is certainly on the case. And after yesterday's GDP print, which basically sort of signals the possibility that the RBA will not move on rates anytime soon, it was a very poor print on the year-to-date basis at 2.3%. That is not just below trend, but well below trend, and that certainly would put a bit more of a dampener on the Aussie dollar as well. So a bit of a double whammy there on that pair. That's why you're seeing the Aussie so weak, and you'd probably expect that to continue over the coming weeks as well. It also therefore puts equities on the other side. So you can see from the trading in the Dow this morning that it's been very hard to sort of judge where the equity markets are going to take this data. So we've had good equity data, good macro US data. That is a good thing to see. It shows the economy is moving in the right direction. New home sales were also very strong. It was actually the highest level they've had since May 1980, and that's an amazing sort of print as well. Does suggest that there is on the upside there, and I'll get to the commodities in a minute, but all of that is good data, but it's whether or not the markets want to take it as good data or see it as a bad thing because the Fed could move. I don't think they're going to move in December. I think there's too many other issues from a regulatory side with the fact that it's going to be Ben Bernanke's last major speech before he hands over in January to Janet Yellen. It'll be very hard for him to do something like that, and he still doesn't believe it's firing at the right point, but it will make jitters, and that's what we're seeing. And you can see on the Chicago Volatility Index that it's up to around about 15.5. It got up at as high as 15.76 last night, and that's just a little bit of a creeping volatility thing, considering that we have seen the US and also Europe particularly really contracting after 8 weeks of very strong, almost tear markets over the last period of time, Kate.
Evan, let's talk about commodities overnight. We've been talking about the bounce in oil and also gold, but we haven't mentioned iron ore, and it's hit 139.2 a tonne overnight. What was behind that move?
Yeah, that is a very interesting move, and I think that you've also got to therefore equate it back into what we see in Aussie dollar terms. Aussie dollar terms, you've now got the price sitting roughly at around about 154.8 Aussie dollars a tonne. Now that is just $1.40 shy of the year-to-date high of 156.2. So you've got to remember that our miners see that on their books when they come back into it, particularly something like Fortescue. Fortescue obviously does deal in Aussie dollars rather than US dollars. You've got BHP and Rio as well, and they had been falling quite strongly. And looking at BHP's ADR, it does look like jumping up around about 33 cents. The move there again gets back to the demand we're seeing in steel, and also again back to what we probably saw last night in the US with those new home sales. Demand for commodities across the US looks like it's picking up. It's why you saw the copper price last night bouncing. It bounced quite nicely, up around about 2.3% to 3.24 US a pound. Now that also signals that we may actually have finally seen a bit of a bottom in the commodities market, because good news in the macro space and also macro news is actually good for commodities. It's not like what we're seeing in the currency space where it could, and also in the equity space where it could actually be seen as a negative because the Fed runs off. But in commodities world, if we do actually see good data, it does suggest that the buying of that commodity will actually be stronger, and that's a good thing to see. It will actually probably help our market over the next couple of weeks, considering cyclical plays have been very much underperforming. We saw gold and silver popping up last night, so watch something like Newcrest, which has been absolutely smashed over the last 2 or 3 weeks. So commodities are on the way up. It is probably going to support our market, considering that at the moment there is a bit of volatility across the globe, and that comes down to good US data, but also the fact that we're seeing in Aussie dollar terms things actually getting a little bit rosier. And if we do see obviously iron ore in Aussie dollar terms popping to the year-to-date highs, watch your BHPs, watch your Rios and your FMGs. They should actually finish the year a little bit stronger than they have over the last 2 or 3 weeks.
Okay, interesting. Evan, let's also talk about the trade balance numbers we've got out today and the implications for the markets there.
Yeah, and it gets back to what we've just been discussing with regards to commodities. So if you have a look, the September export and import numbers were released by Bloomberg, by the Australian Bureau of Statistics, and it's been reported on Bloomberg. We saw iron ore actually hitting around about $6.63 billion in terms of export numbers. Now that is the second highest month of the year, so that is a good print to see. The other thing that I noticed was that something like natural gas is also picking up, hit at about $1.36 billion. Now, having a look at natural gas is up 18.5% year to date, and is probably the best performing commodity around. So that sort of numbers may actually offset what could be a fairly strong sort of trade balance, considering we saw a very weak GDP number yesterday, and on Monday we did see the current account a little bit weaker than expected. So it may actually come in a little bit more in line. We're expecting around about a 380 million deficit, which is not bad considering, and that should probably hold the Aussie dollar just above that 90-cent handle. If we do get a worse print than that, and it could actually happen considering what happened yesterday, watch that Aussie dollar. It could drop into around about 89.5, and that would be a very big sort of dovish signal that we are in a bear sort of movement in the Aussie dollar move.
Yeah, interesting, Evan. Let's just finish off with some opening calls for our market today. We're pretty flat. We had a fairly flat lead in from the United States by the close because we got a bit of a last-minute recovery on Wall Street. As you said, we've had a great session for commodities, iron ore, gold, oil, BHP and Rio up in London trade. Why aren't we perhaps looking at a slightly rosier start in terms of the SPIs?
Yeah, and I think it gets back to a lot of people are now weighing up the end of the year. You saw yesterday's trade on the ASX that once we got that softer GDP print, we actually got a little bit of a push up, and it probably comes down to the fact that the banks will find that credit lending is probably going to stay as it is for a little while. There was possibly some sort of talk that we may have seen a hike sort of March, April, May next year. I think that's now probably evaporated with that figure. So credit in the banks looks okay. And then you've got the cyclical move. Yes, we are looking like we're opening up very, very flat. We currently see ourselves up only 1 point at 52.74. I think, judging by what we saw in the commodity space, that may actually be the driver. So we haven't had the full filter through of what happened in the US probably in the opening calls yet. We probably take another 20 minutes to really get that on the books.
Yep.
Also, people will be weighing up with what we're seeing from the banks as well, and whether or not they do come back after having a relatively positive day on what was negative news. So that may be the reason why we're balancing up on a flat open.
Right, interesting. Evan, thank you.
Thanks, Kate.